Coming up on the show, Development Bank of Southern Africa signs a memorandum of understanding to establish and manage the South African Infrastructure Fund. Egypt's unemployment rate rises to 9.5% in the second quarter of 2020 due to COVID-19. And Congo Central Bank raises 2020 GDP forecast to minus 1.7%. Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi. Well, let's get the show started now with the markets. And major markets we track here in Africa were mostly positive at intraday. South Africa's JSE index rose 0.34%, while the Nigeria's main index was up marginally by 0.01%. Only Egypt's EGX 30 index declined at intraday by 0.61%. Kenya closed positive on Monday. And major markets in the Middle East were all positive at intraday, with Saudi's main index up the most by 0.85%, while the Qatari index followed closely, gaining 0.82%. Elsewhere in the UAE, Dubai's main index also rose 0.85%, while the Abu Dhabi index added 0.32% at intraday. And it's been a choppy trading in the city of London. The FTSE 100 index of blue chip shares fell initially, but has now recovered its losses to sit unchanged at 6,126 points. House builder Hesmond was the top riser in London, up 5%, after reporting a strong pickup in demand since the pandemic eased. But M&S is still struggling after announcing sweeping job cuts, down 4% towards the bottom of the FTSE 250 leaderboard of smaller listed companies. The worst performer is outsourcing group Capita, which plunged almost 10% after reporting a 28.5 pounds loss due to the pandemic. For intraday market numbers, here is Simon. Hello, Simon. Good afternoon again. While M&S planned job cut is still making waves, the Labour Party has blamed what it called government incompetence for the job cuts at M&S and other retailers. Also, the Union of Shop, Distributive and Allied Workers, the UK's fifth largest trade union, has called for urgent talks between the company, the government and unions. What is the plan out there to save the UK retail market?
Yeah, I think that's a little bit harsh from the Labour Party, a little bit of point scoring against the Conservatives there, because I think obviously we've heard the word unprecedented used a lot, but I think retail is in a really tough position across the board, and I'm not sure how much the government could really have done. The government probably won't step in here and bail out M&S. They've been unwilling to do so with firms like Virgin and others in recent months that have asked for loans at least. The government would say there is help available. There's this thing called the Coronavirus Retail, Hospitality and Leisure Grant, a grant of up to £25,000 for eligible companies. It is a famous British brand. It has a long and successful history here, M&S or Marks and Sparks, but it's also one of those stores that's been seen as being pretty traditional and maybe a little bit slow to innovate. Store sales have tumbled 47.9% in the last few months, almost 50%. M&S did say it hoped a significant portion of the cuts, about a tenth of its workforce, will be voluntary redundancy and people taking early retirement. One analyst said that M&S will be very lucky to post a profit of £500 million this year. Many people also fearing that this will hit women the hardest, as M&S employs so many female employees. And as the furlough scheme comes to an end, it is seen as vital that firms start to record redundancy by sex. So we can clearly see the impact of COVID on women who have already been hit hard in other areas. But I think it's clear that the coronavirus pandemic is only part of why there is a crisis in retail at the moment. The move to online and unwillingness to innovate, competition and other companies doing things differently and being able to produce cheaper goods because they're selling online, things like that is probably going to have hit these companies like M&S, even if there wasn't this big coronavirus pandemic.
All right, bring us up to speed with the intraday numbers and their major drivers at the moment.
Yeah, let's start with the all share, which is up slightly earlier, around 0.3%. The FTSE 100 rose into the green after opening lower, as you said before, boosted by house builders and travel stocks, despite rising coronavirus cases around the world and the US-China tensions, which are in the news again today. That was up by the same amount. Analysts say that the FTSE 100 has been boosted by house builders. A stamp duty cut has seen house prices remain buoyant over the last month or so. And doing slightly better still is the FTSE 250 index of smaller, more UK-focused firms. That also rose by 0.3%. Market sentiment has and will obviously be tempered by rising coronavirus cases around the world, anything that can potentially derail an economic rebound. And investors and markets will also be keeping a close eye on the trade deal negotiations between the UK and the EU, which have restarted today. So far, the news coming out of those talks is that there's something of a deadlock over a number of topics and that progress is slow. The pound has remained surprisingly strong in recent weeks. Sterling was up on the dollar earlier by just over 0.5%, and also slightly up on the euro and the yen, which is struggling at the moment after some news and some bad GDP figures out yesterday.
Former Chancellor Sajid Javid has accepted a job with US bank JP Morgan. Mr. Javid left as Chancellor in February after refusing to sack his advisors. What is Mr. Javid hoping to add at JP Morgan?
Yeah, so as you said, Mr. Javid left as Chancellor in February after a row with the Prime Minister, Boris Johnson, and his chief advisor, Dominic Cummings. The bank didn't disclose his pay or his hours, but announced that his role was as a senior advisor on the bank's Advisory Council for Europe, the Middle East, and Africa. The bank says that this work wouldn't interfere with his duties as a member of parliament, although many have questioned if this will be the case and if it's right for him to be a member of parliament and to work at a massive bank like JP Morgan. JP have a habit of doing this, by the way. They already have the former Italian economy and finance minister, Vittorio Grilli, and the former Prime Minister of Finland, Esko Aho, on the council, and also former Prime Minister Tony Blair. He took a post at JP after he left office as Prime Minister. So they've got form for doing this kind of thing. Mr. Javid will provide advice, its thoughts, to the bank's executives in those regions I mentioned earlier, although he is barred from sharing any sensitive information he received as Chancellor. What I would say is often these names are sort of figureheads for the bank and bring with them this good PR. It's always good to get in new clients, for example, bring them into the building and say, oh, look, we got the former Chancellor, he's on the 4th floor and things like that. So I think as much as anything, it's kind of like the headline figure. We've got Sajid Javid, this is why you should lend us your money kind of thing. I think it's probably more of a figurehead role. He is a member of parliament. He does have other things that he's doing, so it's not going to be a 9 to 5 within the bank. But like I said, in those regions of Europe and other places, he's going to be kind of advising, more of a consultancy role, I think, than anything.
Well, we'll see how that goes for him. Thank you and enjoy the rest of the day, Simon.
Thank you.
And European stocks traded in the red today as tensions between the world's two largest economies put investors on edge. Let's talk to Arich now for more. Hello, Arich. Good afternoon. Well, markets in Europe were sluggish this morning, not just over the coronavirus worries, but also concerns over US-China trade tensions. Tell us more about what's driving the market.
Yeah, they were sluggish in the morning, you're right. They picked up a little since then because there's signs that the S&P 500 in New York might climb to yet another record, and that's sort of taking the European markets along for the ride. But there was considerable worry, and I would venture to say there continues to be a lot of worry in terms of the development of the pandemic, the number of newly infected cases being reported, travel bans, possible new lockdown decisions being mulled. So that continues to weigh on the sentiment in the market, but the share prices are going up, not least because of all that stimulus out there. Something also occupying the minds and the sentiment of the traders here, new flare-ups in the U.S.-China trade tension. Donald Trump basically talking about wanting to offer incentives to U.S. firms to bring back production from China to the homeland and offering tax credits for that. That's very unlikely. I talked to an analyst and he said that seemed like pure campaign rhetoric, considering the election is in 3 months. People wouldn't do that in order not to lose the Chinese market, in provoking the Chinese leadership. And also, of course, it would be more expensive if you produced a phone, for example, in the United States instead of in Taiwan or China.
And good news for Lufthansa, but bad news coming from Fraport, the operator of airports in several countries and of Germany's largest hub, Frankfurt. Lufthansa is getting the green light to accept state aid from other countries as well as from Germany. Why is that?
Yeah, Lufthansa's state aid was contingent in Austria, Switzerland, and Belgium on it getting state aid in Germany as well. Germany was the last to give the green light. That's been given now for quite some time. A package of 9 billion euros in Lufthansa support has been passed, but now the green light comes from these 3 other countries as well. And that's important. Interestingly, it doesn't increase those. It doesn't tack on to the 9 billion euros approved by the German government, but is calculated in there so that the German taxpayer winds up paying less. But it is considered to be good news by investors that Lufthansa shares climbing by almost 3%. And you mentioned Fraport, the operator of the Frankfurt airport, and also of many others in other countries. Yeah, the passengers just aren't coming. There's 77% less passengers this week or last week when the numbers, which the numbers pertain to, than in the same week the year before. And there are actually less passengers than the week before that. So the number of passengers has decreased slightly. It's not a good trend. And it's not just not a good trend for Fraport because it doesn't get the fees associated with helping passengers get into and out of airplanes, but it also doesn't have all those shopping revenues. If you look at Frankfurt Airport, it'll be similar in Lagos and in New York, London, Paris, anywhere. If you didn't know it was an airport, you'd think it was a shopping center.
All right, let's have a look at a place and a financial market player we don't talk about often. The Government Pension Fund of Norway has reported a $21 billion loss in the first half of 2020. Tell us more about this number.
21 billion loss in the first half year for the Norwegian Sovereign Wealth Fund. A huge sum, not 21 million, but 21 billion in only 6 months. And this after a record year 2019, where the fund made some $180 billion in profit. Not only COVID-19 and the general situation of the market a factor here, but of course from the past, the Norwegian State Wealth Fund was being fed mainly by the oil income of the state, and it's still heavily invested in oil, although it's reducing that. And with the demise of the oil price, the state fund was also heavily hit. It serves as a model, though, for other institutions of its kind, and it is huge. It remains huge. Assets under management, $1.15 trillion invested in 9,200 companies around the world.
All right, thanks, Ulrich, for those updates there. Enjoy the rest of the day. And in Asia, shares in South Korea led losses regionally in a mixed trading day for Asia-Pacific stocks as the Kospi fell 2.46% to close at 2,348 points, with shares of automaker Hyundai Motor plunging 5.39%. Meanwhile, mainland Chinese stocks edged higher on the day. The Shanghai Composite added 0.36%, while the Shenzhen Component advanced 0.189%. Hong Kong's Hang Seng Index closed fractionally higher at 25,367 points. Japan's Nikkei 225 dipped 0.2%, while the Topix Index ended its trading day slightly higher. Shares in Australia edged higher with the S&P ASX 200 up 0.77%. Overall, the MSCI Asia ex-Japan Index advanced 0.26%. And stock futures were slightly higher today after the S&P 500 once again failed to reach a record level set before the coronavirus crisis hit. Futures on the Dow Jones Industrial Average implied an opening gain of about 60 points. S&P 500 futures and the Nasdaq 100 futures also traded marginally higher. The S&P 500 closed Monday's session up 0.3%, just shy of its record closing high of 3,386 points on February the 19th. The market has been stuck in a tight range as hopes for a new coronavirus stimulus deal dimmed with lawmakers unwilling to break a stalemate. After the break, we talk commodities plus other stories. The Development Bank of Southern Africa, the National Treasury, and the Department of Public Works and Infrastructure have signed a memorandum of agreement in respect of the DBSA's mandate to establish and manage the infrastructure fund. The fund is meant to fundamentally transform the state's approach to the financing of infrastructure projects and ensure more efficient and effective use of resources and improve the speed and quality of delivery. The infrastructure fund is intended as government funding and ancillary support for co-financing of blended finance programs and projects. This includes financing from the local capital market and international financing institutions as a complement for broader budgeting reforms that the government is undertaking to address problems in the infrastructure value chain. Egypt's unemployment rate rose to 9.6% in the second quarter of 2020 from 7.5% recorded the previous year due to the coronavirus pandemic. Data from statistics agency CAPMAS shows that the rate has stood at 7.7% in the rest quarter of 2020. And the Democratic Republic of Congo's central bank has raised its GDP growth forecast to minus 1.7% in 2020 from an earlier forecast of a minus 2.4% due to higher mining receipts. According to the central bank, the mining sector has performed better than expected because of the success of confinement measures introduced to combat the coronavirus, paired with a rise in the global price of copper, one of the Congo's key exports. All right, let's talk commodities now. And on domestic commodities market update, will turn our focus to Nigeria's tech industry. The tech industry is one of the most versatile sectors of industrial minerals in the world, and the global supply is valued in excess of $2 billion, with China as the largest producer. Nigeria has over 100 million tons of proven tech reserves, which is extracted through a mining process and is used for making cosmetics and talcum powder, among others. Now, the proven tech reserves of Nigeria are situated mainly at Niger, Kaduna, Kogi, Osun, and Ogun State. Well, let's talk more about this with one of the research analysts with financial derivatives company, Dumebi Iyeke. Hello, Dumebi. Good afternoon.
Hi, good afternoon.
So the demand for tech in Nigeria is about 70,000 tons, while the supply is about 15,000 tons per annum, leading to a demand gap. What do you think can be done to make the supply of tech commercially viable in Nigeria and of international quality or standard?
Talc is used for cosmetics, talcum powder, ceramics, plastics, and many other commodities. And clearly, there is a high demand for this, particular mineral resource, and there is a shortfall in the supply, meaning that there are constraints and there are, certain factors that are impeding the level of supply for this particular commodity within the country, and even to meet up with some international, demand for this particular commodity. So at this point, where Nigeria stands concerning the talc industry is that there is excess reserves for this particular commodity. There's also an increasing demand, but there is a shortfall in the supply. So for us to, commercially participate and exploit this particular commodity, we need to address the various issues that are affecting supply. And, we look at this in terms of the infrastructural facilities, and we look at this in terms of the equipment, we look at this in terms of productivity, labor productivity, we look at this in terms of personnel, in terms of their knowledge and, expertise for this particular process of mining. And all of this boils down to the fact that there is need for investment in this particular industry to boost up the supply and meet up with the local demand and possibly international demand. And, just to add, the international, quality of talc in Nigeria can compete, with the international, in the international market for talc, because the quality of talc that we have is very unique and, very, very good enough to, compete internationally.
Talc is going to be commercially produced. Do Do you think the internal conflicts in states like Kaduna and Kogi that have reserves will be a constraint? And how do we address these problems?
I mean, national security has been one of the major concerns, you know, during the year and, in time past in the country. So addressing security is one of the major things that, would be a good incentive for investment in industries like talc. And, the mining industry requires a lot of investment, and, the startup cost for mining for mining any commodity, so to say, is very, very high, and investors are looking at their return on investment and how well this could last within a particular period of time. So if we're looking at this in terms of the internal conflicts in major producing states where we have a lot of talc deposits and reserves, the internal conflicts would be a major concern for investors and the investment capacity and their investment within this particular industry. So if we're going to look into this particular area, then the state of the state of security in this particular states that are producing and also have talc deposits is a very major concern for investors in this particular area. So yes, it would affect the supply and definitely cause a shortfall or a lag in this particular industry.
Now, the rise in COVID-19 cases in top producing countries like China, Brazil, and India is likely to distort global supply. What do you think will happen to the price of talc in the near term, and how will this affect investment in the Nigerian talc industry?
Basic, demand supply dynamics. If there is a shortfall in supply, prices go up. So if COVID cases continue to rise in major producing countries like China, Brazil, India, what we would see would be an increase in the price of talc in the near term. And for Nigeria, looking at this in terms of investment, investors are not only looking at the increase in the global price of this commodity, but they're also looking at the state of the economy, where they're going to be investing in, the states where they're going to be active in, where the mining processes are going to be active in. They're looking at their returns on investment. They're also looking at the industries that are involved in this particular commodity. When we look at cosmetics, we look at the plastics industry, we look at ceramics. So what is going to be their what's their outlook for this particular commodities and for this particular industries rather. And we also look at the demand for these commodities. Let us speak cosmetics, for instance. Should there be an increase in the demand for cosmetics within the next 5 to 10 years, investors would be looking at this as a good point of investment. But when they look at their cost of production, this could also impede, or this could also negatively affect their investment decisions. So investors are not only looking at this in terms of the global price of the commodity, but they're looking at this in terms of where they're going to be operating, which is these various states that have, certain level of insecurities going on in those states.
Well, thank you very much for sharing your thoughts there, Dumebi Iyeke. Thank you for your time. Dumebi Iyeke is one of the research analysts with Financial Derivatives Company. Well, on that note, we wrap up today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwagu.